Morning, and thank you for joining us for today's webinar, Liquidity Management, Investing and Issuing Insights. Although I feel like for all that we know, I'm not sure what we know today, given all the uncertainty that's abounds. That'll be the big theme of today's talk. My name is Sean O'Brien, I'm the president of Quick Rate, and as always, I'm pleased to be joined by Jason Heinrich. Jason, you want to go ahead and introduce yourself? All right.
Hey everybody, Jason. I'm the credit union sales rep here at Quick Rate.
Awesome. Thank you for joining us today. Just a couple of reminders. We will send out a link to today's recording with again, a link to the recording and a copy of the slides. So we certainly appreciate you participating and registering for the webinar. Just a reminder, beyond Quick Rate, many of you work with us on our CECL Solver product, as well as for those of you who do any commercial lending, we have a division called IntelliCredit that can assist you with loan reviews, and we have a portfolio analytical tool that you would find helpful. Just a couple of polling questions to get us started here today. I'm going to move the slide back here. We've got 4 of them. Appreciate your participation on these. First one's just around excess liquidity. Do you expect to have excess liquidity to invest during 2025? Just a simple yes or no. Give this 30 seconds or so. Well, this is certainly encouraging. 86% of you do have excess liquidity and 14% no. So let me share those results. So appreciate everyone's participation on that one.
Thank you.
We'll go to the next question. Regarding liquidity concerns, I guess I might know the answer to this one. Are you worried about your liquidity this year? Yes or no? Based on the previous answer, I feel pretty good that this one's going to trend the same way. So that's encouraging. Okay, go ahead and share this one. 76% of you say no. 24% say yes. Excuse me. Let's see. We'll go to the next question, just regarding past due loans. Are you anticipating an increase in past due loans this year? Again, just a simple yes or no. Okay. All right. I'm sure there's an 81% of you say yes, and 19% of you say no. So again, thank you for participating in those questions. Again, I think that's as we, kind of feel like we know a lot and don't know a lot. I mean, it felt like going into last year, we had this slide in a previous webinar where we talked about liquidity, and I felt like last year we were, kind of land somewhere over here between the no landing and the soft landing, where we, felt like even though we had some interest rate cuts, inflation was slowly coming down. The Fed had begun lowering rates. That it felt like we were moving towards a soft landing, and now I'd say we've moved probably more quickly to in between a soft landing and a harder landing, right? I think there's no question, either by design or just indirectly, the economy is slowing. All the uncertainties creating a little bit of a lack of confidence for both consumers and businesses. And that often translates into people saving money, right? Businesses saving money, individuals saving money. So, again, I think that coupled with, the polling question that we do see, past due loans and delinquencies rising, right? It just creates some uncertainty for us as we move into 2025. And, certainly as we closed out 2024, we saw those delinquencies rising. And so, I think kind of where we are today is, even though rates started to decline at the end of the year, we've all been kind of, I don't want to say, we've been impacted by those, the previous rise in rates and what it's done to our members' expectations and our margins. And I think, how our members have been affected or impacted is now there's, probably increased, or when you probably sense this increased competition for every one of our share deposits. We saw, many institutions have seen a decline in just their non-interest bearing accounts as, members are repeatedly inundated with offers for higher yielding products, whether it's from another credit union or another bank, a fintech company, a broker dealer, you name it. They're coming after us. In the digital age, it's much easier to target and market to our members. And so clearly, rates had been so long been low for so long. When they did rise over the past couple of years, it kind of reintroduced people to, hey, I should have this money working harder for me, and that's translated into members wanting higher yields on any type of savings or deposit account. A byproduct of that is member inertia just can't be taken for granted. I think all of us in the financial services industry benefited from the fact that our customers were our members were tremendously loyal to us, and they'd stay with us. Now, as economic times perhaps get a little more challenging for people, they're going to look to put the money to work, and it's much easier now to move that money than ever before. So, I think what it means for us, again, just on a day-to-day basis, is stability of deposits. Certainly has always been important, but in some cases might take precedence over, cheaper share deposits, right? Because we need to make sure to run our institutions, we feel comfortable and confident that we've got, the liquidity, which is, again, great to see that most of you aren't concerned about it. But I think it's something that, we probably have to factor in a little bit more, given the fact that, delinquencies are rising. And oftentimes, everything looks good until it doesn't. Right? I always say one of the things about liquidity is we always have it until we don't. And one of the things that can really kind of escalate is when we do have, credit losses. And so I think we want to continue to be mindful of our investment and risk management processes. And then finally, I'd say that, liquidity is certainly, a priority now for the examiners. And so, again, I think we just have to anticipate potentially more scrutiny on our liquidity policies and practices. So day to day, I mean, these, in some ways, these things never really go away from us. They just probably at different points in time are more highlighted or more sensitive or more prominent. Again, I think the credit quality concerns are probably increasing in their prominence. I just think, again, we're always focused on liquidity. And so I think particularly for smaller institutions, liquidity has to always remain a focus. And then I think anytime there's increased regulatory focus, we've got to be mindful of that as well. So how do we move forward, particularly in terms of investments? I'd suggest now, there's we're probably at a point where we do want to start looking to lock in longer term, CDs if you can, right? Again, your liquidity may dictate that you may only go out a year or 18 months or 2 years with CD investments. But I would anticipate, right? I mean, if I'm sitting here today saying what's going to happen with rates, which I know is a fool's game, parlor game. But again, I think we're probably have moved into the camp where we're either going to get no change in rates or we get a slowdown, which means the Fed, later in the year might lower rates. And so, between now and then, just be opportunistic about where you might be able to stretch out and capture some yield, or just make sure you're getting the highest yield that you can. I mean, I think that's really always been the beauty of Quick Rate. We have been home to the best CD rates. I think, the last couple of years we saw, in instances where parity might have been closer to treasuries and agencies, but we have always remained 25 or 30 basis points better than a comparable agency or treasury. And I would just suggest that at a time like this, we need every dollar of earnings that we possibly can do. So again, I think we've got a good board to provide good high yielding, safe investments, kind of across the board. And again, I don't think I can emphasize enough, we've been doing this a long time, over 36 years, and it's consistently amazed me that, sometimes when institutions will walk away from a higher yielding because they sense maybe it's a little bit more work. Again, every basis point matters. We've really streamlined the process. Certainly encourage you to work to look to the board. On the issuing side, right, where are we with our share deposits, right? I think for most of us, in some ways, share growth, the erosion has stopped. We've started to see some, member deposits come back to the institutions. Not all of us, but for most of us, it's certainly been a difficult 2024. We did see as an industry share deposits grow, so that's encouraging. The flip side, and again, one of all the kind of the definition of liquidity, is the availability to get it at a certain price, right? I think the issue right now has been what's that price? Clearly been, more expensive, particularly, attributable to the reasons we had on the earlier slide, but they do remain expensive, and balancing, where we, pay up, if you will, I think is again one of the things we have to, kind of deal with on a day-to-day basis. I think for most of us, if we're going to grow, share deposits in the wholesale market and even potentially in your retail market now, it's probably going to be coming from CDs, right? Again, lower rate accounts are going to be targets. They're going to be tried to be, incented by, probably a fixed term CD. And again, I think just, share prices have always been competitive, but I think, again, we're just in a window where we are really, really seeing just overall market competition for our best members. And as a result of that, we just haven't seen, even with the interest rate drops of last year, we just haven't seen our interest expense in many cases dropping much, right? Part of that is because a lot of our share deposits are already low cost. They're under 25 bips. But, our deposit mix also impacts that. But again, our checking account customers, our low rate savings customers, they are being, again, inundated with offers to, either internally by you to move to a CD or a money market potentially, or just by a competitor. So a lot of the easy down price, quote unquote, down pricing has already occurred. And again, just, a final reminder that, your best members are going to remain acquisition targets of other institutions. And so we do want to monitor, our lowest rate customers and our best customers, right? Just making sure we're meeting what they need. Sometimes, proactively, going to them can mean increasing what you're paying them, but maybe less than what the market, would require. The final point I want to make is your uninsured member deposits. I know this is an incredible focus on the bank side. I think it's going to be increasingly a focus on the credit union side. It's an important point for the regulators. On your uninsured balances, those are the ones that are most likely to really cause a problem in an institution. So you do want to make sure you have liquidity sources that are available to react if those deposits should leave. But again, on the banking side of the world, about 17% of every institution's deposits are uninsured. I don't have the final number yet on the credit union side. But again, I think it's a point that we should all be, internally monitoring, making sure we know who those members are, making sure we're reaching out to them, making sure they're satisfied. But just something again, can change your liquidity position, really overnight. Quick rate again, Jason's going to talk about investing, but it does, also offer you the opportunity to issue. So it is an additional funding source that you can have at your ready. And so I'd say our final, my final thoughts and takeaways, are one, just continue to monitor your members, make sure we're rewarding our most, in some ways our best deposit or members, our stable ones, main discipline with both our, share and loan pricing, focus on those uninsured deposits, and then just be sensitive to make sure all of our policies and procedures as it relates to liquidity, kind of match what we're trying to do on the business side of things. So, again, don't want to overcomplicate something that doesn't need it. If your liquidity position's fine, but I just know from a regulatory point of view, it's probably going to become more of a focus. And so that usually typically means, a fresh set of eyes on all of our policies and procedures to make sure they are in line with what our business plans and objectives are, and also with just maintaining, adequate liquidity. All right, at this point, I think Jason's going to begin talking, and I'm going to stop talking here for a second. So, Jason,
Thanks, John.
slide's yours.
Perfect. Thank you all again for joining us. For again for new people who aren't familiar with Quick Rate, you can utilize the service on both sides, right? You can invest when you need and then raise deposits when you don't. And for those of you who are here now, currently members that may not know, maybe you're doing one or the other, you can do both. It's both included with your subscription. So definitely keep that in mind. I'll take next slide, John.
Yep.
There we go.
Oh, gotcha.
Um,
Do you want to take them or you want me to keep moving?
I can take it.
Okay. There we go. Sorry. Yeah.
So yeah.
That's right. That's my fault. I hit the stop button. I didn't mean to. Apologize.
We're good. Awesome, y'all. So again, we are the premier non-brokered marketplace online. Been at this for about 40 years now, so plenty of experience here in this space. We come in about almost 3,000 institutions utilizing the service now. So big pool of investors and issuer institutions that you can invest with. We are kind of like a amusement park, right? You pay the fee at the door, you come in, you can ride all the rides as much as you like. So there are no third-party fees, no broker fees, or anything like that. And at the end of the day, we have just an easy-to-use platform with fantastic customer service, and that's made us so successful. And the reason why we have such great, renewal rates, satisfaction scores from our members. So we've worked really hard at maintaining that over time, and even through the pandemic, right? We've seen all over the place where services kind of dipped a bit, but we're still here trying to offer the highest level of service that we can get out there. Again, recognized as an industry leader. This was very apparent during during CECL, when a lot of those, that was kind of being worked on the NCUA side. We were there working with them, just saying, "Hey, this is what we're doing. What are your thoughts? What are you doing?" So again, I think a lot of what we did on our CECL product helped help the NCUA develop theirs. Again, we are working closely with the regulators, FDIC and NCUA. Industry leaders. So here's a snapshot. So as an investor, this might be kind of what you're looking at, right? What rate can I get? Typically our highest rates are anywhere between 20, 30, 40, 50 basis points higher than you might get through your broker. Moreover, the institutions in our marketplace are typically smaller community credit unions and community banks and credit unions that typically don't operate in that brokered space. So a lot of new names in addition to higher rates. So if you're already kind of been digging around the bottom of the barrel with your broker now, saying, okay, what else you got? I have all these. It's a great point to come in here and see a whole host of new institutions, new names there that you can invest with back at those higher rates. So, again, a lot of, as you go down that list, right, they'll continue to stay quite a bit higher. So again, we make it easy for you to come in and have access to a whole network of institutions, right? Either as an issuer trying to raise non-member deposits, or an investor. Hey, I have a ton of money, I need to get to work. We have the institutions you need to kind of do both. So again, very easy to use. All of our institutions that are posting rates are federally insured. That's our criteria, right? You have to be federally insured. You're not, this is a closed marketplace only for financial institutions. So you never have to worry about, hey, who is this, or who's this investor, trying to give me money. It's going to be banks and credit unions. And now let me take you through a walkthrough of the marketplace. Pull this one up here. And this again, all is online, so you can come out here anytime you want, to do what you need to do. So typically first thing in the morning, an investor will come out and do their investing. Before we get to that, it's pretty similar to Amazon, right? You have your profile where you keep your credit card information, your address, and then you don't have to send that to each individual buyer personally. That gets automatically done when you add things to cart and hit, click buy, right? Same thing here. When you first come in, we'll set up your profile. That's going to have just your account information, your users, which again, you can have as many users as you need. Moreover, you can also have different user access levels, right? So, hey, I want this person to run reports, but not be able to work the shopping cart feature. So, you can certainly do that. Notifications, we've got maturity alerts, rate alerts. Hey, let me know when X rate comes into the marketplace, things like that to help you on your day to day. On the issuing side, if you want to raise those non-member deposits, we really don't need a whole lot of information. Just the basics, right? How you're paying interest, minimum, maximum deposits, along with your wire instructions. On the investing side, need a little bit more, right? Who you are, your ACH instructions, as well as your documents, W-9 corporate resolution. Again, this here is what gets sent every time you go to do an investment on Quick Rate. So you don't have to send this off. Moreover, that resolution, we have you sign that or have the authorized signers sign that. So that does take place of your signer's card. So you're not having to fill that out down the road, send that back off again. It's quick, it's easy, it's all automated these days. And then even now, one of our, I don't say not newer features, been around for a little while now, but eWire. Come maturity, you have the option just to click a button. It sends over your wire instructions. Hey, I want my money back, and they can send it right back. If you want to roll that, just as easy to kind of reinvest that back at that same institution. But let's look at the rates. Again, this is live data. This is what's going on today. Here we have all the institutions that are posting rates. All their information is here. And this is really where, as an investor, you'll spend most of your time, right? You'll see to the left, there's these blue check marks. This just lets you know, hey, you have this CD, right? It's going to prevent double placement. When you come on as a new investor, we'll upload your current CD portfolio, and that will automatically populate there for you. So you know exactly who you have and who you don't. Other than that, it's pretty easy, right? We have all the different terms across the top here. Right now, we're on the 1 year, always the most popular, starting with the highest rate first. So, as an investor, you say, "Hey, you know what? I just want to go down this list until I have all my excess liquidity invested." So you just simply click the rate. It adds it to your shopping cart. But hey, maybe you want to do a little research first. You click on each individual name, and this is the information that we track on each institution, right? Who they are, where they're located, their main contacts, minimum, maximum deposits, how they're paying their interest, things like that. Any kind of remarks. Their wire instructions are here. So, after you initiate this, you already know where to send that money. Again, part of our non-broker status is that we do not touch the money. So you're initiating the wire, and they're sending you monthly or quarterly interest payments. We also offer you their financials that gets pulled directly from the FDIC or NCUA. And then finally, we do track any name changes, acquisitions, and update that automatically for you within your portfolio until you'll receive an email letting you know, hey, this institution has changed names. So you'll show up one day, you're like, who's this Dominion Bank? I've never bought them. Oh, you can see that, hey, it was a recent name change. But again, investing is easy, right? As we come out here, we're just going to click on that rate, add it to your shopping cart, and once we're done, we'll go check out, right? Click on that rate cart link. And here we just need to finish out this investment. Say, hey, I want to invest 248,000 in each one of these. And we can plug those amounts in individually. And really, once everything looks good, again, you can, hey, I've got a question, or maybe you want to adjust the dates a little bit. You can certainly do that. And then finally, yeah, we're good. We'll select those, and then we'll send off those inquiries. And again, those institutions will get all of your information, right? Who you are, your resolution, your W-9, your payment instructions, and then they'll come back with a response. So typically you'll send those out, go about your day. You'll receive an email letting you know that has happened. And eventually you'll start receiving, responses back saying, yeah, we'll take that money. We reviewed your information. You'll get an email, and then you'll also be able to see the status in this inquiry section here. Here's a blue check mark, meaning you've been accepted. At that point, you can wire the funds. But if something has happened during the day, and you say, "Oh, wait a minute, I can't do that today," that's okay. You can always kind of cancel those out. Says, "I'm sorry, it just can't happen." So But once you say you want that, we've sent the money. The last step is to post that listing to your portfolio. Really tells our system, yep, we've bought that CD. The issuing institution will issue a safe keep receipt, typically same or next day. So those pop in here automatically. You'll be able to click that link, pull that up, and see your early draw penalties and just the details of the CD itself. This whole system here is called eContact. It's very dynamic. It actually links the listings together. So later, if you update a new resolution, a W-9, they'll be notified and have that access to that document automatically. So again, you're not having to send all this stuff out to everyone. So very easy to manage your CD investment here. Again, this is your portfolio. You have everything you need to manage that. For maturity calendars, you can track payments, post payments. We've got everything you need to manage a CD portfolio. Again, we've been doing this for 40 years and have had a lot of suggestions along the way, and we've incorporated so many of those. Again, here I'm going to touch on some reports. And here, investment and accrual reports, pretty much anything you can need. We have even custom reports that you can create your own. And there's something here that, hey, I would like this. Let us know. One of the big keys is our IT group is in-house. So we're able to make those changes quickly and right away, if they're needed. So and I'm going to touch real quick just on the issuing side. So again, when you come on to quick rate, we understand your needs might change. And say one minute I got excess liquidity, and the next minute, hey, I need to bring in some non-member deposits. You can absolutely do that. Our customer service team will help you get set up with that. Publishing rates is very easy. Come out here, post the rate that you want, and you'll be out on the rate board with everyone else in that list. So there's a little bit more nuance there, and where you want to be and how you want to be there, right? As an investor, you just want the highest rate and move down. As an issuing institution, you might not want to be in that highest position, right? Unless you're looking to bring in, 20, 30 million in the next, hour or two. So you might want to come in a little lower on that list. So, as an issuer, you might see some of these higher rates of going, oh my God, that's very expensive. Well, no, you more realistically going to be a lot lower on that, on the posting board. But yeah, it's very easy. Post your rates. It goes immediately out of the marketplace, and you can be attracting those deposits, immediately. So getting set up for this very easy, very fast. But that's that. So let me go back to the slides, and it's probably going to take me back to the top. Yeah, there you go back. Sorry about that. Let's see here. Highlights. Okay, we're there. Walk through. Okay, perfect. So marketplace again, real-time information. Every time you go out there, it's live. It's live, right? So you have access to funding and investing, and everything you need to manage both portfolios, right? So it's all there, all available. Again, with top-notch customer service. So again, I'm just going to reiterate that, right? So you come on a quick rate, you have access to unlimited funding and investing. Moreover, Debbie Walker has been our director of regulatory compliance for 35 years now. And again, has worked very closely with FDIC and NCUA. So we have a ton of experience on the regulatory side too. So we can help you get set up, risk management workbooks, just really anything you need, to kind of get this going. And again, the best thing is our unlimited customer service support. So shoot us an email and that'll be answered within a few minutes, right? What other, there's not a lot of companies that still do that, right? You send an email and it takes some time before you get a response. Not us. Quick chat, click for help. You can have somebody immediately there to chat with you. And again, those are our in-house customer service reps. So we haven't outsourced that. So if you want to have a couple of takeaways here, right? What are those, right? Well, we have quick connections, quick tools, and quick answers, right? So that's what we got for you. Get you unlimited funding, investing, all the tools you'll need, and then answers, when you inevitably have a question or two. All right, and pass it back to you, Sean.
Yeah, that's great, Jason.
I'll keep clicking the slides.
I'll have you do that. So a couple questions came in. One, are these CDs in the quick rate marketplace available for sale? And the answer is no, right? These are, direct CDs designed to be held to maturity. And then a second comment came in about callable CDs. I know there's been a lot of discussion, both with you as investors and our customer service teams, just about callables. So we are working on an update to better kind of highlight if a CD is callable. So hopefully that will have something to show you, during the second quarter, probably the second half of the second quarter. But we are trying to work to better identify those CDs that are callable, since we know that's been a topic for many of you.
Yeah, and they typically are noted
Yeah.
on there too if they are
Correct.
callable or not. So usually we have a couple different ways that it says callable, and then once you send the request, that they'll accept and say, "Hey, just FYI, this is a callable CD." So you'll be able to know.
Good to mention. As Jason touched on, certainly shoot us an email. Again, coming up tomorrow, we have another webinar. So again, for any of you who are, maybe a little bit larger, just looking for, some digital ideas around trying to attract new members, we have a webinar tomorrow, March 21st, with Infusion Marketing, our parent company. And then also on April 4th, our dear friend Paul Allen from Saltmarsh will join us for another installment of our coffee talks. So, certainly, again, register for those. You will receive a copy of the slide deck and a link to the recording for any of the Quick Rate webinars you register for. Certainly, you will receive that for today's webinar for attending and registering. So we certainly appreciate your participation in those. We'll see if there's any other final questions, but while we're waiting, again, just your next steps with us. If you'd like to review your situation or pricing, or have a tour, or just talk to Jason and David about what's happening, or maybe different things that we're doing here at Quick Rate that we might be able to help you with, schedule a demo. Reach out to us, email us. We'd love to take you through a tour. Again, Jason would welcome the opportunity to talk to you about our other products and services, but certainly encourage you to see how we can help you, and help us better understand your situation. Jason, anything you want to add there?
Yeah, again, we're not just the marketplace now. We've really stepped out of that and gone into a lot of different areas. The biggest one is Cecil. We have a fantastic, easy to use and manage Cecil tool for credit unions. So if you are struggling with your current Cecil, software or method, let me know. We can certainly take you through that. We used NCUA call data, so ours is ready to go right now. So we can go in 20 minutes have an ACL kind of roughly calculated, right? So if it takes you a lot longer than that, then give us a holler. And again, if you are a larger institution and looking for ways to get those large deposit maybe members who only have a savings account, that's kind of some hot money there. We do have with Infusion, ways to kind of target them and try to get them more engaged with the credit union and along with your other members. So a ton of other resources here that can help you out. So I'd love to talk to you about all of those.
Absolutely. So just, again, any questions, go ahead and send those to us now. If we don't see any, I don't think that we do. Certainly appreciate you joining us today. As always, we appreciate you working with Quick Rate. Again, reach out to Jason and David if you have any questions. And thank you again for attending. And we look forward to hearing or seeing from you soon. Thanks so much.
Thanks for your time, Neil. Thanks.